All right, what's going on, everybody? It's Sanglucci and Wall Street Jesus. This is one of the first webinars we have done in 2016. We've opened it just up to our current email list. So you guys are, just in the Sanglucci world. We wanted to go ahead and show you some of the things that we're working on for the new year. And one of the new things has been a partnership with our friend Wall Street Jesus. Wall Street Jesus, man, why don't you go ahead and say what's up and give a little background on some of the things you do, and I would say more so the history of kind of where your expertise in the industry came from.
Yeah, all right. Hello, good morning, everybody. And basically, I got into this game. I was a licensed broker, so I was managing client money. I got into the game 97, 98, and walked in right into the Asian contagion, as they called it, a really harsh correction in 1998. So, but learned a lot from there. And so I have the experience where I've learned to throw out a lot of the things, the so-called noise in this game, and it's helped me out a ton. And right now I focus on just one specific thing. Those of you who know me know what that is. Those of you who are new, it's basically aggressive orders in the option market. Not unusual option activity per se, but aggressive bets in the option market. And I use that flow to get a gauge and make my bets in this game. So
So,
I'm going to
so
show you
how
a
did
little bit
you,
about me.
how did you, I guess, and by the way, guys, we're going to talk about the high volatility market that has really taken place, last couple of months of 2015 and the beginning of this year. As you guys know, we're seeing huge moves in the market take place overnight, which is causing, and obviously the weakness in oil commodities, which is really causing some volatile intraday trading ranges. And that's what we're going to talk about on how Jesus is able to line up some great trades during these types of markets. Also, some ideas, tips, and things that you guys can use for trading these types of environments. Jesus, how did you, let's say from let's say 2000 to where we are now? Where has your edge been? Where has your edge evolved, I guess? And what happened to the whole broker business? I mean, why'd you get out of the game? And how did you kind of stumble upon using options flow as your edge in trading the markets?
Yeah, that's a great question because basically, I mean, that whole financial advisor game after 2008 just has changed dramatically. So, but the main reason why I got out of the game and started trading my personal account was because of the new rules and regulations in that broker industry. You really couldn't trade in and out of things as quickly as you needed to be at times. And, that was a big concern for me because in markets like this, and you know this, Lucci, I'm a big proponent on not holding much of anything overnight. And when I was managing client money, I didn't have that luxury. I would go directly into a cash position for sometimes months because I couldn't, use this style of trade.
Right.
So, I mean, it got to a point where I had to focus on myself. I found an edge that works, that keeps me disciplined, and it was just time for me to focus on that and utilize that.
And I think you brought up a key point that, guys, we're going to come back to quite often. What he said was it keeps him disciplined, some of the options order flow. And I've been obviously privy to what Jesus has been doing, for the last couple of years. And, it really does kind of guide you towards a more consistent trading, provided you're just looking at some of the heavy options flow that is resulting in solid trades or sentiment changes or whatever. And Jesus is going to show you a couple examples as well. And one of the characteristics of a real volatile market, and I think any of you guys who actively trade intraday, you will understand, and you do understand, that it's very easy to get caught up on a directional position that changes on you very quickly. So, for example, for the past couple of weeks, we might have been, down 30, 40 handles on the S&P, and then by the end of the day, we'll rally back, 20 handles or 25 handles. And anybody who's caught short, shorting in the hole, let's say, is gonna get their face ripped off, and that is what happens in volatile markets. People lose their consistency because they're chasing a lot of big money everywhere. They're seeing a lot of big money made everywhere, whether it's overnight or intraday. They end up chasing some of those moves, and you get in, a little bit too late to that move, and you get a disgusting reversal that kills you out of the trade. So that's one of the big issues of trading a volatile market, and Jesus is going to go ahead and talk about that in more detail. So I'm going to go ahead and leave it to Jesus to talk a little bit more about defining volatile markets, some of the strategies that you can use, and how we use this sort of options order flow to stay consistent out here. So Jesus, take it away, man.
Okay, and first of all, when it comes to the markets, I don't want to get in great detail because I'm just I don't pay attention, and I'm not in the business of making many forecasts. So what the market's doing or what the market's going to do next week or next month really is irrelevant to me because I've been in the game long enough where I know nobody knows what this market's going to do. I've seen, some of the sharpest and smartest dudes out there, and they have no idea what the market's going to do. So I try to stay away from that, what I call noise, as much as possible. Okay, I know one thing. I know we are in some sort of correction. Maybe we are in a bear market. Either the two, it's irrelevant. Okay, we are in a rough patch right now where it's prudent to not hold anything overnight, in my opinion. And if you need to do so, I would stay as small as possible. But if you could take advantage of what Lucci was just mentioning, these drastic moves intraday, there's a lot of money to be made intraday. It's almost like there's 4 or 5 market sessions in one these days. That's how crazy the moves have been. But you have to have some sort of game plan, strategy. You can't just go in there and try to buy every low or high. You'll basically be taken on a roller coaster. So I'm going to show a couple of examples today of how what I call wise guy activity, and that's basically in simple English, aggressive action by some of the smart money in the options market. Okay, and I want to make the point again. It's not unusual option activity, UOA, as the acronym that people know it by, because not every trade is unusual. It's more I'm focusing on the aggressive nature, the aggressive behavior behind that bet. And you'll see what I'm talking about in a couple of the examples I bring up today. All right, so you get an idea. Here basically, let me pull this out if I can.
So Jesus, how would you first define, let's say, a volatile market? I mean, let's say if you looked at a chart of a couple of months on the indexes, how would you define that we're in sort of a volatile market, and when to start, switching up, let's say, your strategy, stops, things like that? How would you define just a volatile market?
Okay, and people look at the VIX, and the VIX is usually a good measure, but look, it's just common sense. When you see a market acting the way it is right now,
Yep.
and this is not new, this is going on since, the end of last year. This is not normal behavior.
Right.
So, when you see the market acting in this type of fashion, right there and then you should say to yourself, let me take a step back here, really start to pay attention to my risk, and, just be a little more prudent about the situation. Okay, there's sweet spots I've learned in this game where you look to become a little more aggressive and try to swing for the fences, and then there's times like we're in right now where it's really about getting defensive, protecting your capital, and paying attention to what you have at risk. Everybody always focuses on, how much money can I make on the trade, where you really should pay attention to how much risk you have out there.
That's a great answer. That is a great answer. I would definitely second that, because during volatile times, especially in the chat room that Jesus and I are in daily, we see a lot of intraday traders that will just will just look at something, let's say like a big flush on Amazon or some of these large cap stocks like Apple or whatever, and say, oh my God, this thing's got to bounce. This thing's got to bounce. And when it does, I'm going to make so much. That's not the way that you want to go about making a trade in a volatile environment. So I second that, Jesus. What do you do for identifying, let's say, specific sectors, behaviors in sectors, and then planning accordingly for the next day? So let's say all of a sudden, you got all this juice in oil. How do you use that to your advantage as well? How do you also use the order flow in those sectors to help you find trades?
Yeah, and basically that's what it all comes down to is the order flow.
Right.
And I try not to carry too much weight. And it's a good point that you bring up. In these type markets, I try not to carry too much weight in what happened yesterday, because just as this market has these gyrations and volatility, you have to see the option flow these days and how fast things can change. I mean, what they're loading up on the call side and extremely bullish on a day or two ago, they could be sweeping the other side and betting against today. So I try not to put too much into what happened yesterday. Okay, I try to get a gauge on, all right, yesterday was some bullish action. Will there be follow through today?
Right.
So I'm always looking at what's currently happening to make my decisions, not what's happened in the past.
All right. So
that's a dangerous thing.
Let's take it to the order flow, man. Show us some examples. I'm sure everybody is excited to see.
Yeah. So basically, let me pull up here so you get an idea. Just for some of you who aren't familiar, this is from our private Twitter feed, the Wise Guy Activity feed that comes with the membership for the Steam Room chat. This is just the order flow here, and this is what the Wise Guy flow orders look like right here. All right.
Can you give them an example? Can you just walk them through like an actual order flow here and how you would go ahead and set that trade up? So what does all this stuff mean for those people who are looking at this and being like, okay, what does this mean to me?
Exactly. That's what I'm going to do here. So here you got basically the symbol of the underline. Okay. Telling you whether it's a bullish or bearish bet. Okay, in this particular trade, it was a bullish bet. The strike, March 35 calls. All right, so basically, here's the price of the stock, 35.52. So he's making a bet of March in the money calls. So we call that a high delta trade. He's looking for a bigger bang for his buck, but he has to put up more money to see that. So that's a really bullish order in my opinion. And here's the dollar amount behind that bet, $275,000 bet, okay, which at the time was, for this particular name is a pretty nice sized bet. Opening, meaning it's greater than open interest, which gives us an idea that the player may be opening a new position in that contract. And this is also very important, and maybe in other webinars I'll get a little more in detail, but basically multi-sweep. And sweep is, for some of you who are familiar with me, I use the word a lot, but in simple English, it's an aggressive bet. It's a player that went out there and swept multiple exchanges to get a fill as quick as possible on this particular contract. So the player was looking to get a fill more important than a better price on the contract, which stresses urgency to me. Okay, and again, those are characteristics of an aggressive bet. And here you have the price of the underlying, which is also important. So when that bet was placed, this is where the stock was trading at that time. And then here you have basically how unusual the trade may be. And again, as you can see here, depending on unusual scanner you use, you may not pick up on this particular trade, 0.5. Sometimes I see this in double digits. But that's irrelevant to me because, like I said, I already know it's an aggressive bet and it's for a decent size for this name, and that's the most important thing to me. Okay, so those are the details, and we structured this the flow alerts for the pertinent information, the most important information that I look for in a particular order. And that's basically everything you see right here. Okay, the strike, the dollar amount, how the order was processed, and what price was the stock at the time the bet was made. Okay, and that's basically it. It's that simple. And once you see a couple of these things, it's pretty easy to read. And I'll take you into the chat room now so you can see how these look as far as they get placed here in the Wise Guy Alert app here on the side. So you can open it up and see the flow and click on the details. Okay, you can leave these all open if you like, and see the details of the order. So let me show you how this can be beneficial to you, okay, in your trading. And these aren't stock picks, so you're not going to tail every single one of these picks. You're going to lose money and be knocked out of the game if you do that. One of the most efficient ways in utilizing this information is sentiment. Okay, and I'll show you a perfect example of that. Thursday, and I don't know if any of you follow me on Twitter, you know that Thursday afternoon we saw a huge frenzy of multi-million-dollar bullish bets come into all the major ETFs as this market was making new lows. Okay, so going into Friday morning after that afternoon rally, we already knew that there was big bullish positioning Thursday coming into Friday. So Friday morning we have a gap up, and here's how the flow looked in the morning. Okay, some small trades, quiet, nothing really going on here. A small gold stock, $3 gold stock, nothing doing. And then at 10:10, you could see right here, was the first notable trade that caught my eye in IWM. All right, and let's take a peek at the S&P just to get a better idea of what the market looked like at that time. And you could see here, let me pull it so I can blow it up for you and you guys could see it nice and clear. All right. Okay, here was Thursday's ramp, and then Friday we gapped up, as you guys are aware. And here's how this market looked for the first half hour of Friday. And if you remember, the flow was pretty quiet up until that IWM order at 10:10. Okay. Now, a lot of times, and here's a perfect point of how you can gauge the smart money sentiment and how it can help you in trading, even if you're not tailing these specific orders. Okay. The million-dollar question Friday morning was, will this gap hold and have legs and trade higher, or, like we've seen, sell off and maybe turn negative within an hour, as crazy as that may sound? And, I'll be honest with you, I had no idea. I mean, nobody had any idea what this market was going to do after that big gap up. And as you can see, we experienced some selling and profit taking in the early going here. And, a lot of people thought that we might give a lot of this rally back. But things changed. If you were a watcher of flow, if you pay attention to the flow, wise guy action, things changed dramatically at 10:10. Because that bet on IWM was placed right around here. Okay? And as you can see here, we just used the example on that Corvo. IWM, the guy bet Feb's 95.5 calls, almost a $600,000 bet. Okay, it was a multi-sweep. He swept multiple exchanges to get filled, opened a new position. So obviously this is a noteworthy bet right here. A $600,000 bet in the small cap ETF, which is a really bullish sign for this market. So that tells me, okay, and I'm going to put you guys in my shoes and what I'm looking at here. That tells me that right now the smart money believes in this rally. They think that these levels will hold, not only hold, we could see a push higher. So a number of things this could have assisted you in your trading. If you were looking to short this gap, thinking we would retrace this whole move, that IWM order told you to stand pat and sit and wait and not make a move because there might be a rip coming. If you were looking to get long this market, but were unsure of whether this rally would hold and have legs. This was telling you that the smart money thought this was a good entry point for that position. So again, you didn't have to tail that specific IWM order to make money off the flow. It basically painted you a picture for the remainder of this morning. Okay, so basically let's get a look here now and we can see. All right, and here I circle this here to give you guys an idea. I don't like to chase any orders. That's you, and especially in this market with the moves we see. So basically what I'm looking to do, the order was processed here. I'm not looking to go any higher than here as far as an entry. And you can see we had a nice little consolidation here. So you had more than enough time to put on a position in anything. And I'm looking at S&P 500 here only because S&P 500 has been a lot cleaner than the IWM. So there's a perfect example. I didn't go play IWM just because the bet was in IWM. I knew it was bullish for the market overall, and I took a position in SPY. All right, and as you can see, after that little consolidation, we have a nice little ramp here, okay? And this right here is what I'm talking about, is a very tradable, profitable move in this market. If you're a day trader and you have the luxury of getting in and out of positions, you have an entry here, and this move, this upside move to here is more than enough to lock in a nice profit. Okay, so, but let's say, for example, you're looking for a little more on the move, okay, and you just have this one bet to base it off. So we're trying to get a gauge off the flow to see if it's telling us any more, okay, and let's go to the flow and we can see exactly that. All right, so here was the IWM bet. And just a couple small bets, you know, SPG, a bearish bet on BX, gold again. Apache catches a nice $400,000 bet. That's a bullish order. Bullish, bullish. So now, from that IWM order, you could see this is all green here. I mean, you don't have to understand option flow to know that this flow is bullish right here. Okay, so that's one positive sign. And then we get to 1030, another solid bet, NVIDIA. Okay, so all this, another solid bet, Corvo, all this is solid bullish action from that 10 o'clock IWM bet all the way to 11, a little after 11 o'clock, 11:07. IWM again. Friday, 3-4, March 4th, weekly 100 calls, $910,000 bet. So the dude comes in an hour after the first IWM bet and puts $1 million bet here on IWM again. So let's go look at the charts here and see what this is looking like. And granted, the flow was looking bullish up until that $1 million bet anyway. So, but just so you get an idea, here it is. Okay, here's the earlier bet that we saw. This is the tradable move here. If you took profit here, I'm not mad at you. And here we consolidate a little bit, sort of choppiness action. Here's that $900,000 bet in IWM. So now, I mean, if you wanted to stick it out and look for some further upside, okay, and they're not always as clean as this, but here's a perfect example of how the flow was guiding you in your trade, okay? It was basically telling you that even though this was chopping out, we were seeing bullish action still flowing in. And then here we catch the $1 million bet, which was bigger than the original bet, and look what happened after that. Okay, so, and before I even go on, I want to talk about the downside, because again, I stress, it's the risk that you have to pay attention to that's most important, okay? The upside will come. You have to pay attention to your downside, and here's what I do to limit my risk. If I take a position here, all right, I'm putting a stop loss right around here, just in case this market, some news comes out, OPEC, any terrorist, anything could happen. And just because a guy bet $600,000 on IWM calls doesn't mean he's going to be right. Okay? Everybody loses in this game. Trust me. There's nobody that hits every single thing they touch. So the bottom line is you have to factor in if this bet was wrong, if you were wrong. Okay? And there's no numerical number or percentage number that I really apply to as far as my stop loss per se. But generally, if this move here starts fading to the downside, okay, and I see the flow starting to turn bearish from bullish, I'm looking to stop myself out because this shouldn't be happening. It shouldn't be trading lower from there. And if the flow's turning bearish, maybe that wasn't a clean directional bet. Maybe it was a hedge against a short portfolio. It could be a number of things. Okay, so the flow's got to confirm that move. And just to be on the safe side, I know that my risk is capped here. And you could see the risk reward in this trade was totally in our favor.
Nice example, right? Man. Nice example.
And that's basically it. And Friday was perfect that we did this webinar today because Friday was a perfect day. Not because we had a huge rally. If you think back, go back to Friday morning when we gapped up, everybody and their mother I know, as far as traders, was thinking that that rally wasn't going to hold. Okay, so that's why I'm saying, and Lucci made a great point about bias. If you were biased here on the short side and said, oh, that, bullcrap OPEC tweet yesterday caused that rally, this is a perfect short, and just disregarded the flow, you would have got destroyed.
We had Absolutely. A lot of people. We had a lot of people too that did get destroyed, and were pretty stubborn on everything for that particular day. I mean, I can commend the flow to helping me line up my trades for that day. I mean, once I see that sentiment change, I have a whole list of names that I want to be long if the sentiment changes. Like, I ripped 5 points out of Win. I ripped 10 points out of Chipotle. I was playing the SPY. I was selling puts all over the place just because of that flow. Bank of America, Citigroup, these things were up 7%. I know Citi was up 8%. Obviously because these financials got absolutely shithoused, for the past couple of weeks and for the first month in January. But once I saw all this flow change, especially from that Thursday afternoon, I mean, I knew the game plan for the whole day, and this flow just gave me that kind of confidence. So again, it can really signal some sentiment changes that can either help you, from losing your ass, let's say, on a biased trade, and it can really help you find the right trades for that particular day, even if that trade is nothing, even if that trade is to do absolutely nothing.
Exactly, and that's the point I stress, even to, like you mentioned, some newer members who are just stubborn and they're just tied up into their thesis and bias and this, even if you did not want to get long this market here, okay, it was telling you, if you were looking to get short, to not do it there. And why would you just disregard the flow? And think about this, though. There are people, okay, a lot of traders, I mean, a good amount of traders that have no idea about this flow, all right? And they're shorting into this not knowing, a $600,000 IWM bet and all this bullish flow in the banks, and then another $1 million bet came in here, have no idea this is going on. So, like Lucci just mentioned, and I sound like a broken record, even if you don't tail any of this action, it will be a powerful tool in your trading arsenal just for the fact that it will protect you in making some wrong decisions. All right, and again, like Lucci just mentioned, that's another point. The banks caught a lot of bullish flow there, and that's been a sector that's been a big drag on this market. So, not only were we getting IWM flow, we were getting bullish flow in other names. The banks, Bank of America, Citigroup caught action, JP Morgan caught action. So all this bullish action just continued. And guys, it continued. I mean, Friday was just a beautiful day because it just continued throughout the day. Look at this. SPY, they're hitting up weeklies that expire that day. And just regardless of what the market was doing at the time, chopping around or into fades, they just kept pressing and pressing their bullish bets. All right, and so I wanted to make that point the first point because sentiment is the most underappreciated aspect of what I refer to as wise guy flow. Okay, a lot of people just are looking for stock picks, and I get it. I was there. I wanted to find that hot trader who spits out winners, and I could just ride his coattails. It just doesn't exist. But this is a perfect example of where you don't have to tell specific orders and get involved and make some money to the upside while the flow was telling you everything was bullish at the time. All
Nice,
right.
nice, nice. All right, so
Now,
let's rotate. Let's rotate a little bit to some of the better strategies to use in let's say volatile markets. So we got a good idea of how some of the flow can lead us to the names that we want to trade and also the sentiment change. Now let's just hook them up here with some of the best strategies here to use in types of markets like this. So what would you recommend? I mean, I know you've already stated that, hey, you stick to something where there's a little bit of an edge. So if you get a big order like you showed in QRO, one of those from the morning, so how would you recommend saying, trading a name like that? So pull that one up, 11 o'clock QRVO. Would you just stick to these names? What kind of other strategies would you recommend, some of our traders use in these volatile markets?
good question, because when the markets aren't as volatile and the moves aren't as big intraday as they are now, I don't really focus on playing the ETFs as much as I do in volatile markets. Just because, the moves are more beneficial in volatile markets. I stick to individual names more so than I would do the ETFs. But I do play a lot of individual names, especially when I see an order like this QRVO that we highlighted, a $275,000 sweep, which is a size sweep in this name, at 11 o'clock. Again, on top of all that bullish flow that we've been seeing. So the steam is there behind you, all right? And we see a very, very aggressive sweep here.
Right.
And I want to blow it up for you so you see exactly what I'm talking about.
Is
Now,
this the oil and gas? Oh, this is a semiconductor. Okay, semiconductor.
yeah, they're a chip stock for defense. Honestly, I don't even know. I don't pay too much attention to that.
Neither do I. Neither do I.
Here's what it would look like in the individual names, okay? So here's where this order hit the tape, right here. Now, unless you're ready to fire and are really quick, you're not going to get this, okay? Some people got it, but more than not, you're not going to get this print. So I drew this box around here to focus on where I would look for an entry on this name. I would not look to get above these levels and buy up here. If it ran away from me, fine. There's so much action out there that it just wouldn't bother me. It may bother me, actually, because it ran so much. But honestly, I don't like chasing, because that's where, here's the problem. You buy up here, that means you're putting a stop loss where around here. And honestly, that could easily happen and this thing still be in bull mode. So that's the problem, is managing your risk when you chase up here.
That's a great example too for some of our intraday traders. It's like the idea is usually not the problem. I mean, it's like if you choose options order flow, if you choose your technicals, if you choose this or that, your chances are whatever you're using here, you're understanding how the market is going to move, and you're placing your bet. If you chase, aka most price followers that just sit there and look at price and they see it just rising and ramping, they want to be a part of it. Now, if you're a traditional price follower that's just going to go market in some of these names, guess what? You're not going to be able to handle the blowback once everybody starts, covering and taking profits into these positions. And this is happening within minutes now, within even seconds. So if your entry point is where, Jesus stated, way past, let's say, the initial order, or not, let's say, on a pullback or somewhere where you can get a better price, guess what? You're putting yourself at more risk here to get stopped out of that trade, regardless if you had the right idea or it was a good trade. So you can still end up kind of in the shit house here if your entry is alongside the rest of price followers who, let's just face it, they don't make the greatest decisions here in the market. So that's a great example, Jesus.
Exactly, exactly. And again, I'm repeating it over and over, but it's being able to manage your risk. And in this game right now, and in these markets where the algos are just swinging things all over to hit stops, I mean, you got to pay attention to it. It's a must. So basically, and here's an example of, this is an order I was really, really excited about, okay? So it was an aggressive order. I was willing to pay up for it, okay? But again, not chase to a point where it got out of control. But I knew this had a good chance of having legs because of how aggressive the order was, all right? And a lot of times what you're going to see when an order is this sharp, as I would like to say, is if you can see down here where I have the cursor, there's volume come into the stock here. And let me pull this up so you can see it. All right, you can see a spike in volume come in right after that order hit the tape. Now, basically, what that is, the market makers who have to take this bet from that sharp professional, they don't want to be stuck with this bet on their books. I mean, they don't want to book this bet, as I would like to say. They have to find a way to hedge it, okay, to put it off somewhere. So a lot of times they'll come in and buy the stock or whatever they got to do to limit the risk of this thing, taking off on them. And you will see this, it's not an exact number, just approximately about 80% of the individual names, you will see this type of volume, maybe not as big, but you will see some change in volume come in after an aggressive bet hits the tape, okay? And then, I mean, use a little bit of logic. I mean, the market makers hedging a short bet, word gets out on the floor that somebody just placed a short bet in Cuervo, all right? The unusual activity guys now are picking it up on scanners up here because the volume's been picking up, so they're coming in buying the stock. So you're going to see the volume increase at some point, all right? And basically, so here's what it looked like after that.
Nice. And I think
All right.
same chart here on Apache and some of the other names here for Friday's activity too. And guys, Jesus just gave you a little bit of insight too on how, the structure of or how the environment plays out once some of these big orders hit. A lot of people don't understand what happens when, those big orders go off and what happens in the market making world, how the trickle effect just kind of goes down to each sort of a little environment in the market. So whether you're brokers looking at options order flow, whether you're, market makers that actually sold, some of these big bets, everybody's got to go back into the market and now react to that happening. This is where the edge is for some of the options order flow. Because of that cascade effect, you can take advantage of it. And this is, this is coincidentally Jesus' bread and butter here. All right, so what else do we have for them as far as volatile market strategies? Any advice you can give to some of these intraday traders on, let's say minimizing some of the risk, maybe curtailing some of their emotions, things like that? Any words of wisdom there before we start wrapping this up?
One thing, Luigi, I wanted to stress, okay, because and a lot of people don't know that about me, is I'm using the option flow, but trading the stock. I'm trading the underlying, okay? So it's a lot different than trading options, obviously. And when in these type of markets, you're not always going to see a dramatic move like this, like we saw in the Cuervo, where you're going to see a huge appreciation in those contracts. So I just want to make the point that when you're looking to day trade the contracts, you have to be more selective and wait for those opportunities where you feel you can see a big enough move for it to be beneficial to you. Okay? I look to trade every aggressive order because I know I can get in here and sell over here. But those calls maybe didn't get as much as a bump as you would like to, to get out of it.
And this is something that we're gonna, this is something that we're gonna go through on another webinar too, about how to trade the option versus the underlying. So we're gonna do a series of these webinars here with Jesus, just so you guys can understand, where their edge really is if you're trading the options versus the underlying. So this is again, more strategy discussions that we're gonna go through in detail. Some of these options, for example, this Cuervo, and again, like I haven't looked at the chain, but some of these options, they don't have the most liquid markets for the options. So you're talking about a possibility of a 50-cent spread or a 40-cent spread where you can't even get a good price for that option. And if it doesn't move substantially, guess what? You ain't going to make a dime on that thing, even if it moves a point in your direction. So this is something that, some of you beginners out there who don't understand options too much are going to have to definitely look into to figure out how to trade some of these things. So I think Jesus here is pulling up another order, which is the Apache. What's going on with this Apache?
Yeah, that's a good point, Luigi. And that's one of the reasons I trade the underlying and I trade the stock because of liquidity. You
And it,
know, I feel
and it is easier. It is damn easier to trade the underlying versus the option.
no doubt about it, and that's the main reason why I do it. And this was Apache. And again, this is on top. This is like if this Apache order hit on a different day, you're not going to see this type of move. But you have to take into account the IWM bets, the flow in banks, the SPY bets that came in, the Corvo bet, and here you have another short bet in Apache. So all this bullish flow factors in to the equation when looking for upside in these things. And you can see here would have been the entry in Apache. And again, a tradable move here. You could have got out here. I'm not mad at you. And look at it. It just continued to go. So, and that's, I get a question a lot that I always get the question a lot. What makes you decide to take this bet, or how do you know to take? And that all depends on what else is happening around us. It's
Right.
not just a simple question, you know?
Okay. Okay. All right. So let's end with one more question, and then we'll go ahead and take some Q&A from you guys. You guys can ask Jesus anything you want. We're going to do about 10 minutes of Q&A, and then show you the promo that we have just for you guys going on. Let's talk day trade here versus swing trade. I mean, you already alluded to it in the beginning that you don't choose to trade overnight, but how would you suggest, let's say, using some of this flow to day trade and to swing trade?
Okay. This flow is, tremendous in trending markets as far as swing trading. I was a swing trader up until a little over a year ago where, this market just wasn't acting right. And the way I could tell that is stocks, there was just no follow through. Stocks would initially pop and then ultimately just break down.
Yeah, they
So
called 2015 the year of the failed breakout. That's what the 2015 is being dubbed as.
Yep, exactly. And that exactly was that. So that right there was, early signs of me to move to strictly day trading. And like I said, day trading keeps me a lot more disciplined because of that not holding overnight factor. You never have to wake up in the morning to some downgrade or whatever the case. But I'm being dead honest. When we're in a normal market, okay, whether it's trending to the downside or upside, the wise guy activity has a huge advantage. But when you're in chop like we're in now, and the activity and flow is so fast, and I made the point earlier that they made a nice bet on Apache, a bullish bet here today, Friday. Okay, we could walk in Tuesday and we could see them sweeping puts left and right in Apache. It wouldn't shock me. So it's tough to swing trade these markets when not only the volatility is there, but the action's moving so fast from one side to the other. All right, so when we ultimately come out of this mess, and eventually it's going to happen at some point, then, you could consider swing trading off the flow. Right now, I would use it as a guide and only that. But being brutally honest, I wouldn't hold much overnight these days.
Okay. Okay. All right, guys. So let's take a couple questions here from you guys, and then we'll throw out some of the promo stuff that we have going on just for you guys to get into the steam room and test out some of this order flow. So let's take it to the questions. So we got Edwin Chung here. Do you track P&L performance of the flow that you post. So let me answer this question actually a couple different ways, and then Jesus can rant on it too. We have a lot of users right now that currently are building data on a lot of the flow that gets posted and tracking, okay, does this result in X, Y, and Z move? What are the parameters here and all that kind of stuff. But as Jesus said, the environment is such that it's going to be a difficult, it's always going to be changing. So if you're in a trending environment, let's say you're bullish trending, it's going to be easier to have some of these breakout trades work. If you're in a volatile environment, some of this flow works only for that particular day, works only for that particular hour, and then there's no follow through. Everything changes after that. But you can gauge a lot from the order flow about how long some of that activity will last. And there's plenty of examples that we have out there. But Jesus, do you track P&L performance on some of the order flow that comes out there?
I don't know how I would track, and here's what I mean by that. What distinguishes a winner and a loser?
Exactly.
I mean,
Exactly.
Apache went from 35 to 37. Okay, and if we open up Tuesday morning and Apache's 33, was that a winner or a loser?
Exactly.
So what I mean, basically, the bet has to be profitable by expiration. If you're looking to trade off that, you're going to be in for a rude awakening. So there's no way to track this stuff.
Right,
It's
Edwin, yeah, you gotta refine. Like, if you want to track data and stuff like that, you really gotta refine what kind of data you're looking for. How much profit you're trying to make on some of these things. So then it becomes an automated system, which you're gonna want to look into. How to get that set up. So let's move on to Victor. Our steam room fully automated, i.e., all major sweepers were captured, or someone screens it and only shows selected ones. Jesus, you want to go ahead and answer that one? Or is the steam room fully automated?
Yeah, in other words, the criteria, it's not option flow coming directly from an exchange to the steam room. It's criteria and the specific style of aggressive criteria that I'm looking for that's being screened and put into the steam room. So I don't know if that's answering the question or.
Victor, it is automated. So as soon as this stuff comes out there, remember, like, there's so much options activity that is going on. Jesus screens for a particular subset of factors, and then anything that meets that criteria, aka aggressive buying on the offer, aka sweeping through many different exchanges. Maybe it was just a big opening buyer, or a huge, whether it was selling, buying those particular contracts. Absolutely, that comes in and then immediately gets ported to the options room here. So let's go to David Rosenblum. What do you recommend for trading a smaller account, roughly under 25 grand? Do you look at specific names, trading strategies, platforms with low fees? This comes into the plight of the retail trader, so I'll answer this one as quickly as possible. You want to be a lot more specific. Like, you want to be a lot more specific. You want to trade less. Low fees, even if you go with Robinhood, it's not going to matter. If you suck at trading, you're still going to lose your cash. So it doesn't matter if you go to E-Trade, this or that. Don't worry about commissions. I would worry really about your strategy, about your risk, making sure that you can contain the downside. These are the things that I would focus my time on. We got Bob Taylor. Do you look at the evolution of volatility, smile? I think you mean sim through time to better weigh the current option activity slash flow here. Hold on, let me read that again. Do you look at the evolution of the volatility through time to better weigh the current activity or flow? Jesus, I'm not sure if you understand that one.
No, and I don't know, it may make sense, and I just, guys, I keep it as simple as possible, okay? And I've found a certain edge in this game, okay, where I'm looking for a specific type of aggressive bet. I try to void out any other technicals or details that I can possibly avoid to get in the way of that. I mean, basically what you see on that alert there is what I'm looking for and nothing else.
All right, so we got Raul is saying, do you track the ask price to determine or the bid price? So, for example, if the volume on the ask price is greater, then it means somebody wants this urgently, or is it the bid price that you look at? Raul, I mean, we were stating that before when we looked at how the option flow actually looked. Yeah, pull up that. There you go. So some of the, here you go on the private Twitter feed. 99% on the ask, when you look at this actual tweet, this means all of those contracts, those 4,001 contracts, were bought 99% on the ask, which means that that particular trader was being very aggressive with that particular bet. And we like that. That is considered very bullish. And I mean, you guys can make sense out of that completely when you do trade an option and you aggressively want in. What do you have to do? What do you have to do?
Exactly.
Like you have to hit the
Exactly.
offer. If you don't hit the offer, you ain't getting in this stuff. Now, granted, you're not playing with this kind of size, but if somebody is out there sweeping 4,000 contracts of a name like Cuervo, you got to pay attention. You got to pay attention, and chances are it's going to produce a cascade effect that can be very tradable. So what else we got? We got Ryan Hildreth here, already a member of the Steam Room. What's going on, Ryan? When you're only seeing bullish/bearish sweeps in individual names and not the indices, do you stick to only trading individual equities? I think it's a pretty good question, Jesus.
Yeah, and I kind of spoke about that point a little earlier, but I mostly focus on the individual names. It's just in these volatile times, the ETFs, have been worth paying attention to because, again, of these big intraday moves. But again, I want to use the overall flow. In other words, just to give you an example, basically, um, if an Apache order comes in and the rest of the flow has been really bearish and the market is under severe selling pressure, I might sit back and wait before I jump into that Apache order just because the overall flow is bearish and the climate of the markets in that particular day is bearish. Okay, so I'm taking the order itself, but I'm also trying to get a gauge on overall flow at that specific time.
Cool. Cool.
Whether it's ETFs or individual names, it doesn't matter.
All right, Morton's got a great question. And by the way, before I answer some of these other questions, we're getting a lot of great questions here. Keep them coming. We have a promo just for you guys, just for the people in this webinar. We're going to allow you guys to come into the room for just $50 for your first month. That's actually $49. The current subscription costs $225, so you're getting a huge discount here. And this is just a promo for you guys. So we want you guys to test this out. We want you guys to try to take a look at some of this order flow to see if it's going to help you just in your intraday trading, cut down some of the volatility in your trading and get you to focus on the right names, get you to focus on a more consistent strategy instead of theorizing where the market can go in a couple of days, in a week. This will help you focus and drill down on the right names here. What else we got? We got more enlightenment here. Is there a way to use this info for swing trades? Absolutely, absolutely. I'll give you a perfect example, and we actually just we showed one today. Finally, when we got some of that bullish SPY action and all those index bets, I mean, Jesus and I haven't seen that kind of activity, I would say, for the whole year, correct, Jesus?
Yeah, no doubt. I mean, as far as size and aggressiveness, we haven't seen anything remotely close to that in a long, long time.
Right. So, Morton, if I was a betting man and I was a swing trader and I didn't mind the risk to the swing trader in this particular environment, and by the way, there is substantial risk in this volatile environment, as Jesus outlined during the webinar, I would be long. I would be long swing right now, for a move to, let's say, 188 by Tuesday or possibly 190 on the SPY. And, when I'm talking swing trade, it's more of a position trade in the sense that you're only going to be carrying these things for a week, maybe even 2 days, maybe even 3 days. Anybody who's looking to swing trade, again, in this volatile market, and Jesus already mentioned this, it's a tough place to do it. It's a very tough place to do it. Monday, Sunday, China could tank another 5%. Then what are you going to do on the open when, you have all these long swings? So the pain tolerance right now in a volatile market, let's just say you got to have a serious pain tolerance. Would you agree there, Jesus?
Yeah, exactly. And that's what I mean. Like, if you're going to decide to swing trade, okay, you wait for an opportunity like we saw Thursday, but that was, like you mentioned, extremely rare where we saw that type of activity come in. But if you have to swing trade, that would be an ideal situation there. And at the same time, stay small. You know what I mean? So you don't hurt yourself. Understand what you're putting in, especially if it's into the option. Understand that you could wake up the next morning and it could be worthless. So just have an idea of your risk. But I would say stay on the smaller side because this is not the type of market, the type of environment where you're looking to swing and make a lot of money. It's just there'll be better times for that, and it's just not now.
All right, all right. So we got a couple more questions. Again, just plugging the promo here. We have a subscription just for you guys that is going to allow you to get in this room just for $50 a month. It is a 75% discount. We are, again, trying to get you guys in here, trying to get you guys to use this flow and show how it can help you change some of your trading here for a more consistent approach for finding the right names to trade on a daily basis and finding sentiment changes, big sentiment changes that can help you, understand how to move your particular book, how to adjust your positions if need be. What else we got? We got Juliana Patron. Any plans to build a database of flow by individual name? Twitter search is now useless after 24 hours, and like to use the flow to swing trade after market chop volatility stops. That's a great idea. That is a great idea. We have a lot of plans to put data behind what we're doing, and again, we just kind of connected. We just got this product rolled out, with the Jesus order flow, and we are absolutely always working to advance this data for our customers. So keep, stay tuned and see what we got coming on down the line here. Victor, let's see, we got another question from Len. Did you carry anything overnight in light of the size of those bullish bets? And again, this is just more of the swing trading. Jesus already, threw out there that he does not hold overnight. I sometimes do. I have a little bit overnight. I'm long Win, I'm long swing on Win, and I'm long swing on Chipotle. So these are two names that I love here for a move higher. Obviously, I need the market to stay up as well. But again, who knows what can happen on Monday and Tuesday? And Nilay is saying, I trade crude oil futures. How might this help me get an edge? Jesus?
Well, I'll tell you, as far as energy, wise guy action in a lot of the energy ETFs has been, in my opinion, one of the most powerful indicators, since we've had this problem in oil prices. A lot of times we see sweepers, call sweepers, aggressive buyers come in to the energy ETFs in major turning points in the price of oil. So again, I don't want to lie to you and tell you that 2 years from now, when oil stabilizes, that it may help as much as it does now. But right now, there's been a lot of action in the energy ETFs that can definitely help you trading oil futures.
Cool, cool. Let's take a couple more questions, guys. Tom Smith is asking, do you always buy the specific option that has the huge order inflow? Okay, and I think we're going to do this on a subsequent webinar, but I can speak to this, seeing as how I use the options that some of the order flow hits on. So for example, the Apache example that we threw out there today, I usually stick to that same option, but it depends, man. It depends. Let's say you have, what we saw on Thursday. Jesus, you remember the very far out of the money IWM and SPY calls, right? So we had, let's say a couple of months out, you might see on the SPY is very far out of the money. But if there's all of a sudden a change in sentiment, I might play a weekly. I might sit there and play a weekly. It depends on the trade here that I'm going for, and it depends on the liquidity for that particular option. if there's no liquidity for these options, you have to go with that particular option that got the order flow, that caught the order flow. And again, this is more in depth on how options markets work that we're going to address in a subsequent webinar. What else we got? What else we got? Do you limit the number of positions you are in at a time, Jesus?
Again, it all depends. There's no exact answer. It all depends on what's taking place that day. Like for example, Friday morning, with the type of bullish action we were getting, the type of bullish action that came in Thursday, I wasn't really concerned about how many positions I had on Friday morning. Now, as this market ripped higher into the afternoon and the bullish flow started to calm down a bit, yeah, I would pay attention to, having too many long positions on up there just in case we turned. But there's no exact answer there. Again, it's getting a feel for the flow and what's taking place that day. It's not some, mechanical system that's just going to tell you exactly what to do, when to do it. You got to try to understand what the flow is telling you. And it's not that complicated unless you make it complicated. But, there's no exact answer for those type of questions.
Cool, cool. All right, guys. So listen, when you are using this, if you want to use the coupon code, remember the coupon code is webinar. So you're going to go straight to wallstreetjesus.com. You're going to click start your subscription, fill out all the necessary info, and you will get a coupon code. And you want to enter webinar, okay? You want to enter webinar here to get your discount for $49 a month. And that's going to help you, and that's going to get you the discounted price for just the first month, and then you're going to get rebilled at the regular subscription cost of $225 here per month. All right, so let's take one more question here, and let's call it a wrap. Again, we are going to record this webinar and get it out to you guys, so anybody who missed the webinar or wants to go back to it can check it out. Again, guys, go to wallstreetjesus.com. Use the coupon code webinar to get your $49 for the first month. Let's see, one more question here, and then let's call it. Wow, there's a lot of questions here, a lot of good questions. If I missed any questions, don't worry about it. We will get to you in the subsequent webinars. Is this your usual setup? Meaning you look at the 1 minute for individuals and 5 minute on the S&P 500. This question comes from Brent Taylor. Jesus, what do you have for an answer there?
Yeah, good question. I mean, basically, this is pretty much the setup. I like 1 minute, 2 minute charts just to get an idea, because like I said, you'll see in the individual names the volume come in, and as I was explaining before. So now that I'm exclusively day trading, I focus primarily on 1 minute charts, and also just to have an idea of what's taking place in the overall markets. Sometimes looking at oil or VIX or something in the background. But really just paying attention to the flow. That's basically it. I mean, that's the first thing I'm looking at here is pay attention to the flow. When I see a name that looks, when I see a bet that looks aggressive and interesting, that's when I'll pull up the name right here and take it from there. So
cool.
A pretty simple approach.
Cool. All right, guys. So we're going to wrap it up. Again, we want you guys to test out some of the stuff we have going on here. It works really nice on mobile too, and that's one of the cool things about it. Jesus, I know you predominantly actually work on your mobile, don't you?
Yeah, I use mobile a lot. Just because send out charts and updates on other things that's going on and some names we own of the market. So
yeah, so there's a lot of people. Yeah, there's a lot of people that that currently just use the mobile because they're indisposed at the moment, or they might be at a 9 to 5, whatever it is. These guys are using the app through mobile. The platform looks pretty sexy on the mobile as well, so you can get the alerts just as they appear in the Steam room on your mobile as well, and interact with anybody in there. Also do all the same private messaging that you can on your desktop. Obviously, the more active traders here we'll have in the environment. We have a lot of cool traders in there. We got a lot of traders that trade a lot of different strategies. Correct, Jesus?
Definitely, definitely, and that's what I like to see. Because again, it's my strategy suits me best. It makes me a better trader. I'm more comfortable trading in it. That's not the case for everybody. So the best thing about our room, I think, is that you meet other traders that are trading off the action, and you're learning about different styles. So just in case my style doesn't suit you, there are several different types of traders in there trading off the flow.
All right. All right. So again, guys, go to wallstreetjesus.com, put in the coupon code webinar, and that will go ahead and give you the first month for $49 a month. Jesus, thank you very much for doing this webinar on this cold Saturday morning. And guys, we will record this for you and let you know. Obviously, you get another email too with a buy link for the promo. Jesus, man, thank you very much, and we'll see you soon, man.
Awesome. Had a lot of fun. Thanks, guys. Thanks for coming.
Take care, guys.